Most investors calculate commercial property yield in less than 10 seconds. Monthly rent multiplied by 12 divided by total property value. And based on that number, they decide whether to invest or not. But serious investors don't stop here. Today, I will show you how to calculate real net yield step by step, the way commercial property should be evaluated. This is episode 1 of our commercial investment classroom. Let's start with a very simple example. Let us say uh, property price is 1.5 crore, or we can say that we bought a commercial shop costing 1.5 crore. uh, Now its monthly rent is, let us say, 75,000. So annual rent will be 75,000 into 12, that is 9 lakhs. So gross yield comes out to be 9 lakh divided by 1.5 crore, that is 6%. This 6% is your gross yield. It is correct, but this is only the starting point. Gross yield is not a decision point. Assume we have got a 1 month vacancy. Even in pre-lease property, vacancy risk exists. Lease ends, tenant exists, market slows. So let's assume 1 month vacancy. So adjusted annual rent will be 8.25 lakh. So if you are getting confused कि ये 8.25 lakhs कैसे आया, तो हमारा annual rent 9 lakh का था, and if there is 1 month vacancy, then 9 lakh minus monthly rent, that is 75,000, and that will be 8.25 lakh. So our new yield that comes out to be 5.5%. Already yield dropped from 6% to 5.5%, and we have not even considered expenses yet. So now let's come on expenses part. So expenses will mainly be maintenance, tax, and there can be some miscellaneous expenses. So let us assume that all these expenses will be 75,000 yearly. So what will be our net rent in this case? So 8.25 lakh minus this 75,000, that is 7.5 lakhs. Now we are closer to reality. This 5% is your net yield or net operating yield, and not the marketing number. So how this came? Our net rent will be this 8.25 lakh minus this maintenance, that is 7.5 lakh, and net yield will be 7.5 lakh divided by 1.5 crore, that is property price, and it is 5%. So let us assume कि we have bought this at 1.35 crore instead of 1.5 crore. Then in that case, our yield, our net yield comes out to be 7.5 lakh divided by 1.35 crore. Here we calculated 7.5 divided by 1.5 crore when property price was 1.5 crore. But now our property price is 1.35 crore. So in this case, we can clearly see that our yield, net yield, has increased from 5% to 5.5%. So what is the real net yield formula? It is basically gross rent minus vacancy minus expense divided by total property value, or you can say entry price. Here you can write divided by entry price comes out to be real net yield. So what is the real net yield? If we can write, so real net yield is equal to gross rent minus vacancy minus expenses divided by entry value, property entry value. So this is our real net yield. Same property, same rent, only entry price got changed and yield improved significantly. Smart investors focus more on entry price than advertised rent. So if you will follow this structure, nobody can sell you a wrong deal because now you know how to calculate logically. In the next episode, we will apply this exact concept in our first commercial property X-ray. And from that, we move from theory to real deal analysis. If you found this useful, then comment template and I may share a good template, a useful template for this in future.